Trading contains substantial risks and is not for every investor. An investor could potentially lose all or more than the initial investment. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. This presentation is for educational purposes only, and the opinions expressed are those of the presenter only. All trades presented should be considered hypothetical and should not be expected to be replicated in a live trading account.
Hello, everyone, and thanks for joining me. Today, I will discuss my favorite topic, one of our most recent research insights, the EG Divergence Bot. I'm very excited to present this topic since it aggregates the fundamentals of EG indicators. So thank you for your time, and let's start. I will start by giving some introductions about market movement, randomness, what significant price levels are, and why they are so important in trading. I present the EG trigger point, the EG's most popular product. Then I will talk about the divergence indicator, what exactly it is looking at, and why it can be very useful as an entry confirmation tool, confluence trading. And finally, I will present the Divergence Bot. I will show you a demo that I'm running on my computer on my NinjaTrader 8 platform. Introduction. So the market movement looks very noisy. It goes up and down and then up again. When we talk about randomness, we usually mean that the behavior of the market is really unexpected. We see a green candle and the market goes up. We press the market button, probably buy button, and immediately the market reverses, takes us out and continues in our direction. And we all agree that it's impossible to predict the price movement or whether the market is expected to go up or down. So how is day trading possible? So the good news is that there is a set of significant price levels for every instrument whose market behavior is much more expected than any other price levels, random places, when it reaches the area around them. So it's impossible to predict the price movement, but it's possible to get price levels, to understand price levels where the market's behavior is more expected when reaching them. And these are what we're looking for as day traders. So we're waiting patiently until the market reaches this area, and waiting patiently may increase the probability of success in trading. Since we don't want to trade based on coin flipping. Significant price levels are leading indications. And it's very important, guys, to use leading indicators, not repainting ones, those who indicate the price movement even a few hours before. And an example of such an indicator is the EG trigger point. The red levels are resistance, providing you with short opportunities. And the green levels are support, providing you with long opportunities. and they are delivered to you every day, 10 hours before the market opens. So the trigger point is a leading indicator. It is based on an AI engine running on our cloud servers. It processes deep historical market data, providing you with support and resistance levels daily, 10 hours before the market opens. And the uniqueness of them is that they are fixed and non-repaint, and they have a high probability for the market to react. Therefore, these levels are good for position entries. And this is one of our nice slogans. A little sense of humor. We, EG indicators, don't really know where the market will go. We tell it where to go. Each time we see the market reaction, when it reaches the trigger point levels, it immediately feels like we tell the market where to go, which is, of course, it's a joke. So the Divergence Bot is provided with the trigger point levels for position entry. And what else? The bot also needs confluence to increase the probability of successful trades. An active position needs a tool for position management. So for entry confirmations, the entry confirmations are given by the divergence indicator. And for position management, we take the EG trading stop, which considers the asset's volatility. Trigger point, position entries, divergence, confluence or entry confirmations, trailing stop for position management. So the EG divergence bot consists of uses the trigger point levels, the divergence signals for entry confirmations, and the trailing stop for position management. What is divergence? It identifies market imbalance. For example, let's look at MACD, which is a very common indicator. Divergence is when the MACD goes in a certain direction, while the market, the price, goes in the opposite direction. So we understand that it represents market imbalance. Therefore, it's useful for reversal detection. The market wants to go balance, so it should reverse. And remember, short at resistance and long at support, meaning reverse. So divergence, guys, is a reversal confirmation tool. Divergence is a reversal confirmation tool, and the trigger point levels are the entry points with a high probability of a reversal. And the trailing stop is based on ATR. The EG trailing stop is based on ATR, average true range, which is a measure of the asset's volatility, useful for trailing the stop loss when during an active position. It draws the trailing path on your chart based on ATR. running the EG Divergence Bot. First of all, I invite you all to subscribe to our YouTube channel. We upload backtesting experiment results so you can follow. Now, let's understand the bot's properties. So the Divergence Bot was developed for the NinjaTrader 8 platform. And when looking at its properties, we can see the following list. Starting at settings, all the properties relate to the divergence indicator, to the divergence settings themselves. So these are the divergence indicator properties. And the first one is the position properties. Let's take a look at them. So what do we have in position properties? We have the quantity, how many contract with what we want the bot to trade with. And we have the stop loss. In all our videos, we take a technical stop loss unique for each instrument. And we want to mention the order type. So given a divergence signal generated near a trigger point level, we want to tell the bot what type of position entry it needs to apply, whether a market order or a pending order on the level. And a few position management types were implemented. Our favorite one is, of course, the EG trailing stop. Regarding the other properties, like the distance for the market related to a trigger point, required for the bot to consider the divergence signal. We don't want the bot to consider divergence signals if the market is too far related to a trigger point level. We only want it to consider the signals when the market is at non-random places, remember. And what to do on opposite signals and with high proximity levels. These are the properties here. So first one is the distance related to a trigger point level required for the bot to consider the divergence signals, and what to do on opposite signals, and what to do with high proximity levels. So in this case, max trade 1 means that if the bot identifies a zone of trigger points, it only enters a single position on the middle, on the levels in the middle of the zone. And why is that? Because we observed that when there are levels that close to each other, the market tends to get choppy in this area, and we want to minimize the risk in this in these cases. And now I want to show you the demo that I created on my computer. So this is my NinjaTrader 8 plan. It shows the trigger point for July 18th. And now what I'm doing is attaching the trailing stop to my chart. So I have the trigger point of July 18th and the trailing stop. You can see that the trailing stop draws a band around the price. So we have the trigger point, the levels, and the trailing stop, the band around the price. And now I will show you how I use the bot to explore my strategy on historical data. So using market replay, the NinjaTrader platform allows me to download historical data for exploration. So in this case, I have downloaded the oil historical data. And now what you see here is what happens if I play the data. So you can see the candles generated on my chart. So we have the levels, we have the trailing stop, and we have data for the oil future. And now we are ready to attach the divergence bot. Because it's the oil future, the technical stop I'm using is 20 ticks. So the 20 ticks, I pick 20 ticks, and the sensitivity of opposite signals, I take high sensitivity. Okay, the rest are the default settings. So 20 ticks for oil and high sensitivity for opposite signals during an active position.
Order submitted.
So a short signal was generated by the Divergence bot on a trigger.
Order canceled.
So the
Order
bot
submitted.
placed a sell ending order, and then long signal was generated by the divergence indicator, so it took the opposite side. Again, it placed a pending order according to the direction given by the divergence indicator. So now it takes the breakout of the level.
Order submitted. Order canceled. Order submitted. Order submitted.
And now another short signal was generated by the divergence indicator. So the bot placed a sell pending order, and now it manages the position using the trailing stop, and it considers opposite signals for trailing. The sensitivity for opposite signals for trailing is high because this is my property. You can see how the bot follows the trailing path and considers opposite signals for trailing combination.
Order submitted. Order canceled.
Now a long signal was generated by the divergence, but the pending order was not filled.
Order submitted. Order submitted. Order filled. Order submitted.
Another
Order
long signal,
canceled.
another pipe.
Order submitted. Order canceled. Order canceled. Order submitted.
Now it takes the
Order
breakout
submitted.
of the level, and then it reverses because of an opposite signal generated by the divergence indicator. And now we're reaching the end of the day. It should stop. So we stop the market replay. We
Order filled.
reset the bot. and we import the daily levels of the next day. And after we import the daily levels of the next day, we should press the F5 button for the indicator to update. So a new day, a new set of levels. And now we're going to run the divergence bot. Again, new day, new levels, new running.
Order submitted. Order canceled. Order submitted. Order canceled.
Now, if you manage it manually, we probably close the short position due to the first touch rule and let the bot takes the long signal generated by the divergence afterwards. In this case, we didn't do it, but when managing the bot little
Order
manually, we
submitted.
can do it.
Order submitted. Order submitted.
But in this
Stop
demonstration,
failed.
we do not manually manage the bot. We let it run as is.
Order submitted. Stop failed. Order submitted.
So it takes breakouts,
Order
reversals,
submitted.
as you can see.
Order canceled. Order submitted. Order submitted. Stop failed. Order submitted. Order submitted. Stop failed. Order submitted.
We can
Stop
see that
failed.
overall the bot is profitable. We didn't stop it on when the market opened. It was running without stops and without filters. Now I'm going to present the NQ that had a very challenging setup that you would see in a minute how challenging it was and how the bot performed during on that day. So to run the bot on NQ, we need an appropriate stop loss, which is 40 ticks, not 20. So we just change the stop loss, the rest remain the same, and we play the bot. So the levels are up and down, the red levels are above the market, and the green levels are below the market. And what the bot does is wait for the market to reach the levels to consider the divergent signals for position entry.
Order submitted. Stop filled.
So this was early morning, and now I want to show you something. What I'm going to do now is stopping the bot, moving forward, show you how the market did related to the trigger point levels, asking you to guess how the divergence bot performed while looking at the market related to the trigger point levels. So I'm moving for a minute to 15 minute time frame. I'm removing the trailing stop so you can see the chart cleaner. So we are in 15-minute time frame. Moving forward, I want you to see how the market did related to the trigger point level and ask you, what do you think the bot did or how it did when we executed it during this date? You can see that it was a challenging setup for manual trades. Okay, again, it's 15-minute time frame just to show you how the market did or on that day. And then I will get back, I will execute the bot, and you can see how it performed on this very challenging setup. Okay, so this is the setup. Now let's move backward. Let's execute the bot without filters, including market open, and you will see how it performed. So to do so, let's move back early morning, and let's move to a 2-minute time frame. And let's run the bot again now that you know how the setup was looking. So you remember that at the first touch of support 0, it did well. So you can see it here now again.
Stop. Order submitted.
So this was early morning. A very good trade was taken by the bot. And then when we reach the
Stop
market
filled.
open, you can see with the challenging setup how the bot did. Okay, it's reaching the trigger point level.
Order
No trades.
submitted. Stop filled.
Long signal
Order
by the
submitted.
divergence. A very
Stop filled.
challenging setup, as you can see.
Or stop filled.
But now, because it was designed to avoid over trading
Order
high
submitted.
proximity levels,
Stop filled.
you can see that this
Order submitted.
choppiness
Order submitted.
almost did not
Stop
influence the
filled.
bot. The choppiness almost did not influence the bot. It just ignored some of the levels due to high proximity protection mechanism it was designed with. So the challenging setup that you saw beforehand, you can see how the bot did when trading that challenging setup.
Target filled. Target filled.
You know who made it.
Hello, and thanks for joining us. Today, I will talk about the automatic strategies developed by the EG Indicators Company. Led by academic experts, EG Indicators is the leading company of AI futures trading tools. With the background of over 10 patents and academic papers, EG Indicators developed an innovative AI engine that utilizes historical and correlated market data to allow you to analyze the market smarter and make informed decisions. Our algorithms are based on data not readily available on most platforms. This unique service is our competitive advantage, enabling our AI to perform at a higher level. With EG Indicators, you're not just guessing. You're trading with the confidence of precise, AI-driven insights. As for the automatic strategies, they were all developed to trade using EG Indicators. The EG trigger point is an indicator that presents significant price levels on your chart. It's based on an AI engine running on a cloud server and calculates unique support and resistance levels delivered to you daily. The market continuously changes, and our indicators continuously adapt to these changes. Our algorithm derives insights daily, and accordingly, our unique levels are provided to our customers. These levels are fixed and non-repaint, and when they are delivered to our customers, the market is located in the middle. Between the dashed lines, the resistance lines are red, and the support lines are green. Statistically, the market tends to bounce back when it reaches the levels for the first time during the current trading day, providing you with good trading opportunities. Buy at support, sell at resistance. The first touch rule refers to this phenomenon. First, touch.
So, the EG team has developed 3 automatic strategies designed to trade these indicators.
The EG Trigger Bot. The EG Trigger Bot was designed to trade the first touch rule. Given the daily levels, it places pending orders. Upon reaching the levels, it manages the position automatically by trailing the stop loss at a predefined frequency. Although statistically, the market tends to bounce when reaching the levels for the first time during the current trading day, they may be broken, and some traders prefer to wait for another indication as a final confirmation and to time their position entries.
Therefore, we decided to develop a suite of indicators to provide final entry confirmations and to contribute to the trading success.
The EG Price Action Indicator, Confluence and Divergence Indicators. Confluence trading is when combining more than one technique or analysis to increase the odds of a winning trade. While the EG trigger point levels are useful for position entries due to their accuracy, the other tools were developed for entry confirmations and timings.
But what about position management? The EG trigger point levels are good entry points, and the others are good confirmations, but still the trader needs to maximize his potential return.
That's correct. So, for position management, we developed the EG trailing stop, and to demonstrate the potential return we developed the following strategies. The EG Price Action Bot.
Ready for statistics on 6 instruments?
In this video, we demonstrate the potential return of trading using the EG trigger point and the EG price action indicators. For demonstration, we developed a fully automatic strategy.
We show 1-week statistics where over 500 trades were taken on 6 different instruments, trading from 2 a.m. until the end of the trading day.
No filters, default settings, constant sized unique stop loss for each instrument. The EG Divergence Bot was designed to trade the signals generated by the EG Divergence Indicator. Its entries are the trigger point levels. These entries are much more accurate since the divergence indicator waits for the market to break, and then the reversal is taken. Therefore, its drawdown is low. It manages the positions using the EG trailing stop indicator, combined with a method that considers opposite signals generated by the EG divergence indicator. Each time an opposite signal is generated, or the market reaches a trigger point level, the trailing speeds up. If you have the EG trigger point, divergence, and trailing stop indicators, you can enjoy the free trial we offer for the EG Divergence Bot.
And if you have the EG trigger point, price action, and trailing stop indicators, you can enjoy the free trial we offer for the EG Price Action Bot. For both, the trial plan will be available for you within 30 days of the subscription. Note that they are exploration tools developed for educational purposes only, allowing you to explore the strategies that can be applied when trading with EG indicators.
Subscribe to the EG Trigger Point annual plan and to the complimentary tools at egindicators.com.